Negative interest rates increase. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to have a look at a Reuters article looking at, well, the expanding criteria for accounts that will get negative interest rates. Guys, Danske Bank, in this article from Reuters, has increased the threshold, lowered the threshold for accounts that will have negative rates applied to their deposits. And we've talked about this earlier in the year, where a viewer of the channel sent us some of the correspondence he got from that very bank and just the impacts it has on his business. Now, before we go through all of this, let's have a look just here. We'll remind ourselves of the countries that have negative interest rates around the world. You've got Switzerland, Denmark, Sweden, and Japan is the historically the best example. The European Central Bank has now gone into negative rates, essentially. So there you have it, guys. Put your money in a bank, and instead of getting interest, you are literally paying even more. Now, we actually pretty much have negative rates here in Australia at the moment, because our inflation, CPI, if you believe it, is 0.9%. Now, to get anything decent, how many bank accounts? You can get 0.55. I've got 2 bank accounts with ING. I've got one where I have to jump through a million hoops to get 1.35% interest. I have to put $1,000 in another account. I have to make 5 transactions, and it's capped at 100 grand. So then I've got another account. So that one I'm beating the inflation rate. My other account I'm getting 0.35%. You know, I did the whole Rabo Bank and I was getting, 1.75%, guys. But that introductory rate ran out. So I'm going down. My money there is actually losing value with regards to inflation. The interest isn't keeping up with the inflation. And because that, for me, that's set aside for construction work, it's getting even worse. The purchasing power is getting diminished even more and more because of the inflation in that particular sector. So, we actually do have negative inflation if you take it all into account. Negative interest if you take into account with inflation. But it could get even worse with negative rates. And this is what's happened over in Europe. So Danske Bank lowers the threshold, everyone. Let's jump here and have a look at this article from Reuters. So in Copenhagen, Danske Bank, Danske.co, on Wednesday said it would lower the threshold for applying negative interest rates on retail deposits, bringing the bank's policy more into line with the rest of the market. The Danish bank has been dealing with negative interest rates for some time, prompting many to pass them on to customers with large deposits. We continue to be in the extraordinary situation that negative interest rates have almost become the norm, or at least will continue for a prolonged period of time, Chief Financial Officer Stefan Engels said in a statement. It would not be viable for this situation not to be reflected in our interest terms. Danske was the last of Denmark's large banks to impose negative rates on retail customers' deposits, which it did in February this year, but it only affected around 1% of customers. From the 1st of January next year, Danske will lower the current threshold for applying negative rates from 1.5 million Danish crowns, 235,000 USD, to 250,000 Danish crowns, the same threshold that applies to several other Danish lenders. Danske said it would apply the same negative 0.6% as it currently charges. That reflects the rate the lender pays by depositing money at Denmark's central bank. Danske shares were down 1.4% at 9:33 GMT in a mostly positive Copenhagen Blue Chip Index. Side bank analyst Mikkel Emil Jensen welcomed Danske's move, saying it was both expected and positive, as Danske would be able to transfer some of the cost of depositing money in the central bank at negative rates to its customers. They couldn't wait any longer. They had to pass on the bill. The move will affect 10% of the customers, the chief executive Chris Volker Zhang told Reuters, all things being equal, it will have a positive effect of 500 million Danish crowns. Danske Bank's Denmark's biggest lender on Wednesday also reported a net third quarter profit of 2.1 billion Danish crowns, above an average estimate of 1.7 billion crowns in an analyst poll compiled by Danske Bank. Last week, they raised its full-year profit guidance, citing lower cost and improved market conditions. So their profits are going up, but they've lowered the threshold. So now, instead of 1% being affected by this, 10% of retail customers are being affected by it, everyone. And this, well, it adds up, guys. It adds up. Now, let's just talk about this. This was the letter from the same bank sent in November last year. And this is for deposits in excess of 250,000, which has now even gone further down. Now, you've got to understand, the viewer who sent this to me, he ran a business. He ran a business and he needed to have a bankroll of money in the account. So he would be charged negative interest rates just for having the money sit there. And that's another cost. I think he was saying about, it's $1,500 to $2,000 a year, another expense that he's going to have sitting there. He can't not have the money in the bank. He needs it there. He needs it to pay bills, to pay for expenses, to just run a business. You want to have a business that has a pool of money sitting there. And now the problem is, that could be an internship. It could be a portion of someone's wages that's now disappeared, going to the central bank, because the central bank wants to encourage people to pull their money out of there and to spend in the economy. Spend. Borrow money for houses. Then we see the candle effect bubble up in different sectors. Now, that's the challenge of when this happens in business. Will we see negative rates here in Australia? Will we see it? Should it be something we're worried about? Should it be something we're scared about happening here? Because it's happened in other parts of the world. Now, our governor, Philip Lowe, rules out negative rates for Australia. This is from May 2020. Reserve Bank Governor Philip Lowe has ruled out the possibility of negative rates being deployed in Australia, saying the policy would not benefit the economy. And I've looked at this in a video 8 months ago, and hopefully if I'm organized, it should appear in a tag right above this section, if you can watch it and see the footage of what Philip Lowe, our Reserve Bank Governor, says to one of the Senate committees with regards to the economy. And no negative rates, no negative interest rates for Australia. He says it's very unlikely. Now the reason is, well, do you trust anything our governors say? We just, we know how accurate they are with their wage index. But the argument he makes, and it seems like a sensible one, is that it doesn't actually benefit the economy because people actually save more. Now remember, they want to stimulate their economy. That's why they juice up. They like the wealth effect, flowing through, so people spend more. People save more. You're losing more money out of your bank account, so you funnel more into it to think, well, there's a cost here, I better save more. So it has the opposite effect of what's intended. Now, does that mean we absolutely won't see it in Australia? Well, no. We're going to be dragged along by other countries in the world. If it could have an impact where if other countries go even more and more negative, and we're too high, that could put pressure on the Australian dollar, and then they may have to act. But I think it would be a last resort, because could you just imagine the negative consumer sentiment that would have if we started hitting negative rates? Or maybe people will start living off their afterpay and credit cards. It could be terrible. So, what are the solutions to all of this? Now, like anything in life, I think you need to take a balanced approach to this and consider your risks. There are going to be people that are pushing a narrative of potential negative rates or bank bail-ins. Buy my product to secure your assets. Your super is going to get stolen by the government. Quick, buy my product to protect your assets. There are people, they're selling stuff like this. They're working on fears. I'm not too worried about negative rates appearing in Australia, at least while we have Lowe. I'm not so sure about the deputies under him. I'm not worried about bank runs or bail-ins here in Australia, honestly. We've seen that our politicians will do whatever they can to kick the can down the road. I'm worried about inflation rearing its head in the future. We'll have to see. Maybe we'll get lucky. Maybe the global tides will pull Australia along. Remember, we're only a small fish in a big ocean. I would suggest the one thing that does concern me is the potential for all money in clauses in the banks and diversifying the banks that you're doing business with. Don't have everything all with one. Spread out your money. Separate your business from your personal. Separate your mortgage from your savings. Keep them separate, because then if something goes wrong, I've heard stories where brokers have told me, he had someone call him up and said, "Oh, my bank's given me a month to get out," as in they don't want to do business with me anymore. This is a person who had a business. He was working in the airport industry with regards to providing all of the little push cart things. And the banks, this is around the whole terrorism saga, the banks said, "No, we don't want to have any exposure to that. You need to get rid of your credit cards, everything." You got a month. That's what worries me. That and politically motivated debanking. So develop a series of relationships. That's the advice I would give you, rather than buying a product or a scheme or a little thing from anyone. Just be sensible. What do you think, everyone? Do you think we'll see negative interest rates here in Australia? Are you worried about it? Do you diversify your banking? Do you do all your banking with one? Or you're like me? Do you have to jump from one to the other, just chasing some interest above inflation? I want to get this house done, so then I'll just start. Frankly, I'll be putting everything chasing dividend shares. I don't care right now. That's the plan, But it'll probably be another year or two for us before we do that. And while that's happening, I want to have a chunk of money in cash. And right now, it's going backwards. Awesome. At least we don't have negative at the moment. As always, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. Why is that outro not coming up there? You can support us by using any of our affiliate links. I'm just literally editing my PowerPoint as I'm recording. Such a polished operation here at HeiseSays. You really get your money's worth, guys. Look at that. Boom. Beautiful. You can use our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. If you sign up with SelfWealth for share trading, we each get 5 free share trades. Or if you fund an account at stake, we each get a free share. I'm using that to buy partial shares in some US growth stocks that I want to invest in, long-term companies. I use another one, I think IG, just for my dividend stash that I'm building. I'm building my pocket money game. It's just pretty much, any pocket money I find, I'm turning into dividend producing shares using IG. Stake is more for, if I want to buy a portion of, put $100 in a big company just to see what happens. You can support us by buying our merch. We have pocket squares from our very own blog where we make them ourselves. You can sign up, use Teespring to get cups and those type of things. You can also support us by good old Gold Pass from the Perth Mint or via PayPal. Take care, everyone. Have a great day. See you next time. Bye for now. Oh, that's wage growth. We're signing off. See ya.